What's up, people? We got so much going on in the market right now. I really thought it was appropriate to make a video before Monday comes around. Um, as we all know, tariffs have been crashing the market. At the close of day Friday, it really looked like we were still selling off with no signs of relief, and the only reason it stopped was that the market had closed. All right, so we head on over here to the Fed tracker. We can see that the Fed has increased rate probabilities to 5 times this year. It looks like they're planning on holding steady at the next meeting in May, but come June, we're planning on going down 1/4%, another 1/4% in July, another 1/4% in September, another 1/4% in October, and another 1/4% in December, and then starting to price in another one in 2026. All right. Obviously, rate cuts will be bullish for the market at this point. Coming up this week in the calendar for major events that could cause more volatility. We got 10-year bond auction Wednesday, April 9th in the afternoon. And then April 10th in the morning before market open, we have core CPI and unemployment. Then let's see here, Friday morning before market open, core PPI, and then at 10 a.m. we have U of M consumer sentiment and inflation expectations. Recently, we have seen those reports cause a lot of volatility in the market. Let's head on over here to the SPY chart. All right, this is the monthly SPY chart. Obviously, on the monthly, we are still bullish on the monthly SPY chart. It has not flipped over at this point. We are approaching a major area of interest on a monthly chart. That's going to be the top of this high here, 480. We're going to see how the market reacts when we get there, if we get there. Um, it also kind of lines up with this lower trend line here. Also, once we take a look at the expected move, we'll see that this price also lines up pretty not too far off with the expected move this week. It's the 2022 high, so really hoping that's the spot where the market bottoms out, but we'll see when we get there. Heading on over to the weekly chart. On the weekly chart, you can see we have a clear downtrend. We have a high here, lower high here, lower low here, lower low here. It doesn't seem totally crazy to me, the idea that we could open gap down again on Monday, mainly because when we closed Friday, we closed at the very bottom, and then after market, it started gapping down a little bit, although it did go back up to yesterday low a day before after market hours closed. Um, I mean, I don't think that the signs are all here that we're at capitulation, we're at a bottom yet. Um, if we're gonna hit a bottom, well, not if, when we hit a bottom, things we might want to see is a look below and fail, like some type of failure pattern, or maybe we would want to see some divergence between SPY and VIX. We want to see where SPY is heading down and also VIX is heading down. I can give you multiple examples in the past: October 12th, 2022, March 23rd, 2020, October 4th, 2011, March 6th, 2009, all examples of the market bottoming out and SPY and VIX were in divergence from each other. So looking at possible moves coming up this week. Well, let's first look at the expected move. From the options market, the expected move is 538.22 high, which would be a close of this bottom gap, and 470.29 low. So the market is pricing in a lower high and a lower low to continue the downtrend at this point. Obviously, Last week we traded well outside the expected move. Should we stay inside the expected move this week? Maybe this will be the end of it for at least a little while, or at least, get a counter trend move to the upside. Um, if you look at fear versus greed scales, we're on the extreme end of fear. So my opinion going forward is either J Powell or Trump will likely give in and cause people to start wanting to buy at these low prices. And that'll kick in the start of a greed run. So hopefully we get closer to that level soon. So let's take a look at the market profile, volume profile, that is. Go back to the weekly chart. You can see that we closed below this high volume node right here, showing the point of control. The point of control has moved down all week long and closing below this high volume node. That's definitely a bearish sign on the week. And a sign that, maybe we will see some more selling on Monday. All right, so let's get into some possible pathing for this week. Um, Pattern A that I could see possibly happening is opening with a gap down, coming back in to Friday's low, and then if we can get above this 511.50, which was the August low, then we have a chance. If we can get a lower high above this, we do have a chance that we could at least close that first gap. And let's see, that would set up like some type of risk reward scenario. You know, there'd be our risk and our reward for a long position up. I mean, I would not even think about that unless we get a higher low Monday above that 511.50. Another possibility, we open gap down or we open at the bottom here and we trade back up into this gap and we fail to close it. Now, if that happens, that's going to set us up for some more selling for sure. Well, I should never say for sure because nothing's for sure in the market, but it should set us up for some selling. If we get up here, we fail inside the gap, create a lower high above this 523.75, then I would be setting up a short position, some type of risk reward like this, at least down to the bottom. Yeah, at that point, we're probably likely to come down even further. You would just want to monitor line to line. Once you hit the bottom of Friday, we would just want to monitor our trade for possible continuance, possibly, clear on down to this 480 mark, possibly. You would just have to put in a stop that follows your trade. Okay. Another possibility here on pattern C, this would be a sign of capitulation. This would be a sign that we've hit a bottom Monday. Okay. Say we trade downward or trade, it fails and we start trading back up counter trend, get a higher low above this 511.50, then again we're going to be looking at possibly closing this gap, maybe further. If we trade down and fail, that's a strong sign of a counter trend move to the bullish side. Okay, that would be a better pattern trading upward than the first pattern over here in A. And then our other possibility is we open somewhere near the low Friday. We stay at the bottom, just like we did Friday, just like we did Thursday, and we consolidate down here at the bottom for a while. That's a sign of a bear flag. Attempt to go higher, fail, create a higher low above the range where we are trading in that consolidation. Then we'll be looking at moving lower. I would be monitoring positions to trade possibly all the way down to 480. This might not be all in one day though. This could be over a period of multiple days. So it just depends on your style of trading, how far you want to take it. The safest way is obviously to go level to level. Okay. You don't want to take trades until you have higher highs or lower lows above or below key levels. Let's take a look over here at the different sectors, if I can find them. Let me see here. They're around here somewhere. All right. Here's the majority of this sectors that affect SPY. You can clearly see all these sectors are trading down, extremely bearish. They're all trading down with each other. Extreme sell-off mode. There's nothing more to say about that. We're bearish until we're not. This is something you would see in a capitulation bottom where everything's bearish and direct with each other. If you look over here at this, I mean, everything has just sold off except for bonds, which means that that's a flight to safety. Money's getting put out of the market into the bonds for safety. Okay. Let's take a look over here at the Russell 2000. Russell 2000 small caps definitely affects the direction of the market. We were worried about Russell 2000 getting below 2015, back into this range, getting up here, then falling back into this range, which is going to be very bad for the market. Obviously, that's exactly what happened. Switch on over to the daily here. So now that we're back into this range, typically with that's a look above and fail, and that typically means you're going to trade back to the bottom of the range. Should we pull back, get a lower high off of this line, then we're probably looking at the bottom of this range. Should we get back above, a look below and fail, I mean, that would be the best thing that could happen for the overall market. Let's take a look over here at Tesla. Tesla was looking like it was going to be bullish on the daily chart here. That was on Thursday after the first sell-off. You could see we nearly had the possibility of a reversal here. We had our lower low, and then we came up, looked like we were creating a higher low, and then in the process of creating a higher high that failed on Friday. Tesla sold off 10%. Now it looks like we're back to creating another low and heading back down, possibly to 238.78, if not further. Take a look at NVIDIA. NVIDIA is it's definitely at a pretty important level here, being this previous high. It's got all this overhead supply above it, so it's going to be hell to get back above this. But right now we're seeing how it reacts to these highs over here. But don't try to catch the falling knife on NVIDIA. I wouldn't be trading at the lows. You would want to see a pullback and then a lower high before heading lower again. Let's look at the Qs over here. This is the expected move this week on the Qs, high 450.15, which would mean a close of this gap, and then a lower low down here to 392.5. That's from pricing it in the options market. Zoom out on this. All right. These are the Q levels on the Qs. I'm not going to go into a great deal of analysis on the Qs here. It's bearish. We're downtrending. We would hope to see some type of capitulation, some type of end to this soon. Um, let's just hope it's coming. IWM. This is very similar. I think we already looked at this, right? Did we? Well, if we did, one more thing to say about this. If price gets below this 162.36, gets all this overhead supply above it, that's like absolutely terrible for the overall market. We don't want to see that happen. So let's hope it doesn't. Apple fell back into this range. So I would be looking for possibly a lower high around 192.97, knocking back down to the bottom of this range unless it gets above these highs here. Um, then we'll see about it. Let's take a look at market internal somewhere around here. All right, look at this. Look at, oh, this is the Q's market internals. Let me see if I can find spies. Let's pull it up. Second, oh, there it was. No, hit the wrong button, of course. 1 second. Looks like it's trying to freeze up on me. Let's give it a minute to load here. All right. Look at the sell volume on SPY on Friday. This is extreme. This is it's beyond extreme. I mean, you can go back and we haven't had volume like that forever, for a very, very, very long time. Um, extremely bad. Over here on VIX, we're closed all the way up at 45.30. We haven't been that high on VIX since August 2nd. ADD was at extreme negative levels, more extreme than we've seen in a very long time. Okay. Let's see, it got way down here to negative 2,500. That's a rare C. Okay. See what tick was like the last couple days. I mean, obviously it was like sitting at negative 1,000 quite often. We spend a lot of time at negative 1,000 and below. Anytime we got close to positive range, it just shot back down. So what I'm looking for going forward on Monday on SPY, I am looking for hopefully a look below and fail this pattern C, which would signal hopefully a bottom for this, or I'm looking for divergence in the market internals. One of them being SPY headed down and VIX headed down together. I will be posting some type of market analysis Monday morning and we will go from there. Risk management is paramount in this environment. If you're uncomfortable, if you're having a hard time setting stops, if you're just uncomfortable with your risk management, wait. You're a day trader, or you're just a personal retail trader. You don't have to trade every day, and trading every day could be your downfall. So wait for things to calm down. All right. Stay green.